What if I told you that your bank, the place you trust to keep your hard-earned money safe, isn't really working in your best interest? Shocking, right? Now, let me hit you with a statistic that will make your jaw drop. Every single year, banks in the United States alone rake in over $30 billion just from overdraft fees. That's right, $30 billion. And that's just one type of fee. Globally, banks are pulling in hundreds of billions in profits, not just from lending or investments, but from quietly stacking fees and exploiting loopholes that most everyday customers never even notice. So here's the million-dollar question, or should I say the billion-dollar question. If banks are making that much money off the very people they claim to serve, whose side are they really on? Let's get real for a moment. For decades, banks have been marketed as our financial guardians, trustworthy institutions that keep our money secure, give us loans when we need them, and even reward us with interest for letting them hold on to our deposits. But if you scratch beneath the surface, the truth is far less comforting. Banks are businesses first and foremost. Their primary mission? Profit. And unfortunately, the way they achieve those profits often comes at your expense. The truth is, there are countless hidden practices, silent agreements, and carefully crafted policies that most customers never notice. You don't see them in the flashy commercials, you won't read them in the bold print of your bank's website, and you definitely won't find them clearly explained in the fine print of your account agreement. These hidden mechanisms are designed to keep you in the dark while ensuring that banks maximize their revenue streams. Now, I'm not here to tell you to distrust every financial institution or bury your cash under the mattress. What I am here to do is shine a light on the secrets banks don't want you to know. Because the reality is this: the more you understand how the system works, the less likely you are to get trapped by it. So, in this video, we're going to pull back the curtain and expose the practices that banks use to make billions from everyday people like you and me. From hidden fees to manipulative interest rates, from the way they design overdraft policies to the tricks they use with your deposits. By the end of this video, you'll never look at your bank the same way again. All right, let's start peeling back the layers, because the real secrets aren't in what banks tell you, they're in what they don't tell you. And once you see how these systems are built, you'll realize why banks keep making billions while so many customers struggle to stay ahead. Let's break down some of the biggest practices they hope you never question. First up, hidden fees. This is the bread and butter of banking profits. Most banks advertise free checking or no monthly fees. Sounds good, right? But what they don't highlight is the conditions attached to that offer. Maybe you need to maintain a $1,500 minimum balance, or perhaps you need to make a certain number of direct deposits every month. The moment you miss one of those conditions, bam, a $12, $15, or even $25 monthly maintenance fee kicks in. And that's just the start. There are overdraft fees, ATM withdrawal fees when you use a machine outside the bank's network, wire transfer fees, foreign transaction fees, early account closure fees, inactivity fees, the list goes on. In fact, some banks have dozens of different fees built into their structure, each one designed to catch you off guard. Overdraft fees in particular are a gold mine for banks. Imagine this: you accidentally overspend by just $5 on your debit card. Instead of simply declining the transaction, many banks will approve it and then charge you a $35 overdraft fee on top of it. That means your $5 coffee actually cost you $40. Now, multiply that by millions of customers making small mistakes every single day, and you can see how banks pull in billions from this one trick alone. Here's the kicker: banks choose to process transactions in ways that maximize these fees. For example, instead of processing your smaller transactions first, they'll often clear the largest transactions before the smaller ones. Why? Because if your account balance is low, clearing the big transaction first increases the chance that several smaller ones will overdraft afterward, each one racking up its own fee. It's not an accident. It's a deliberate strategy. Next, interest rate manipulation. Here's where things get really sneaky. Banks love to talk about how they reward savers, but if you've checked your savings account interest rate lately, you probably noticed something disappointing: rates that are shockingly low. For years, many banks offered interest rates as low as 0.01%, literally pennies on your money, while at the same time charging borrowers 15%, 20%, or even 25% interest on credit cards. Now, you might ask, if banks are using my deposits to lend out money, shouldn't they share a fair portion of that profit with me? In theory, yes. In reality, they keep the spread. They pocket the difference between the tiny interest they pay you and the massive interest they charge borrowers. And it gets worse. When central banks lower or raise rates, retail banks adjust quickly on the side that benefits them most. If interest rates rise, you'll see loan rates increase almost immediately. But when rates fall, do savings accounts jump up overnight? Not usually. Banks take their time, dragging their feet on increasing deposit rates because they know most customers won't bother to shop around. That lag, those months of delay, translate into millions more in profit for them. Now let's talk about credit cards, a whole industry within banks that thrives on human behavior. Credit cards are marketed with rewards, points, cashback deals, and glamorous perks. But behind those flashy promotions is a reality banks don't want you to notice. Most cardholders don't fully pay off their balances every month, and that's where banks win. The average credit card APR hovers around 20% or higher. To put that in perspective, if you carried a balance of just $5,000 and only made minimum payments, you could end up paying thousands of dollars in interest over the years. Banks love this. It's a cycle designed to keep you owing more for longer, all while they rake in profits. And even the reward systems are cleverly calculated. While you're busy celebrating the 1% cash back on your purchases, the bank is earning transaction fees from merchants and charging interest to millions of customers who don't pay their balances in full. The rewards? They're just bait to keep you spending. Another big one: your deposits aren't just sitting there. This might shock you if you've never heard it before, but when you deposit $1,000 into your bank account, the bank doesn't just keep that $1,000 safely sitting in a vault waiting for you. Through a system called fractional reserve banking, they're allowed to lend out most of that money while keeping only a fraction in reserve. That means your deposits are being loaned out to other customers, invested in different markets, or used to generate profit for the bank. Of course, your money is still technically there for you to withdraw thanks to insurance systems like the FDIC. But the reality is, banks are making money from your money, and they don't exactly cut you in on the profits. And then there's the issue of psychological traps. Banks are masters of behavioral design. They know most people don't switch banks often. In fact, studies show that many customers will stay with the same bank for decades, even if they're unhappy. Banks take advantage of this loyalty inertia by slowly increasing fees or quietly changing terms, knowing that most people won't go through the hassle of moving their accounts. And they also understand timing. For example, some banks will post transactions at odd hours or delay deposits so that you're more likely to overdraft. Others will structure credit card billing cycles in ways that maximize the chance of late payments. Every detail is engineered to increase the odds that you slip up just a little, and every slip up equals more revenue for them. Finally, let's not forget the illusion of free perks. Free checking, free ATMs, free rewards. These perks sound like banks are giving you something valuable, but in reality, they're calculated trade-offs. That free checking account might be subsidized by higher loan rates or hidden fees elsewhere. Those free credit card points are often offset by annual fees, interest charges, or inflated merchant costs that are passed back to consumers in higher prices. Nothing is ever truly free when it comes to banking. So when you add it all up, hidden fees, interest rate manipulation, credit card traps, fractional reserve lending, psychological games, and the illusion of perks, you start to see the bigger picture. Banks aren't just passively holding your money. They are actively strategizing to profit from nearly every move you make. And that's the uncomfortable truth. The system is designed so that the house always wins. Now, here's the part that most people never realize, the biggest secret of all. It's not just about the fees. It's not just about the low savings rates, the credit card traps, or the overdraft games. The real truth is this: banks make more money when you are financially weak than when you are financially strong. Think about that for a second. If you're financially disciplined, if you always pay your balance in full, if you never overdraft, if you shop around for the best rates, well, congratulations. You've just become a less profitable customer. Banks might still make a little money off of you here and there, but you're not the one they're targeting. The real profits come from the customers who are just struggling enough to get caught in the cycle. The people who occasionally miss a payment, the ones who can't quite maintain a minimum balance, the families who lean on credit cards to get through tough months and then get hit with 20% interest. Those are the customers that banks quietly depend on. Here's something that might shock you even more. In many cases, banks have actually designed their products with the expectation that people will fail. Credit card companies know that a large percentage of customers won't pay off their balance each month. Checking accounts are structured so that millions of people will slip into overdraft territory at least once a year. It's not a flaw in the system, it is the system. And here's the jaw dropper. Some banks have even been caught internally referring to certain customers as fee harvesters. That means their business model literally depends on squeezing as much as possible out of the people who can least afford it. It's like a casino. The lights are bright, the perks are flashy, the drinks are free, but behind the glitz, the house is rigged to win. You might walk out with a small prize every now and then, but the odds are stacked so the casino always comes out ahead. Banks operate on the exact same principle. They give you just enough benefits to feel like you're winning, while behind the scenes, the math is carefully calculated to ensure that in the long run, they always win. And that matters because it's not just a few dollars here and there. These hidden practices add up to billions of dollars taken from everyday people every single year. That's money that could have been used for groceries, bills, rent, tuition, or savings. Instead, it's quietly funneled into a system that thrives on your financial missteps. So the shocking truth is this: banks don't want you to succeed too much. They don't want you to be too financially savvy, too disciplined, too aware. Because the more you know, the less money they make. And that's exactly why they'd rather keep you in the dark. So let's step back for a moment and look at the big picture. What have we uncovered here? We started with the shocking truth that banks are making billions every year, not from offering amazing services, but from fees. Fees that are often hidden, confusing, or deliberately designed to trip people up. We exposed how banks manipulate interest rates, rewarding savers with scraps while charging borrowers outrageous percentages, pocketing the difference. We revealed how credit cards, with their shiny rewards and perks, are structured around the fact that most people won't pay their balance in full, and that those who struggle are the ones generating the most profit. We talked about fractional reserve banking, how your money isn't just sitting in a vault, but being used to fuel the bank's profits. And we looked at the psychological traps, how banks exploit our tendency to stay put, to avoid reading fine print, to accept small losses because they feel normal. But the climax brought it all together. Banks thrive not when you win, but when you lose. They profit more when you're struggling, when you're paying late fees, when you're carrying debt, when you're slipping up. And in many cases, the very system is built to ensure those slip-ups happen. That's the part banks don't want you to know, because if you understood how the game was being played, you might start changing the rules. Now, here's the good news. Knowledge really is power. The moment you understand how these systems work, you can start to protect yourself. You can avoid unnecessary fees. You can shop around for better interest rates. You can pay off debt strategically instead of letting it spiral. You can stop falling into the traps banks set and start making choices that benefit you, not them. No, you can't completely escape the system. After all, banks are woven into almost every part of modern life. But you can flip the script. You can move from being the customer they harvest to the customer they can't exploit. And once you do, you'll keep more of your money in your pocket instead of watching it vanish into theirs. That's why this matters, because every dollar you save by avoiding their traps is a dollar you can use to build your future, not theirs. So now I want to hear from you. What's the worst experience you ever had with a bank? Did you get hit with an outrageous fee? Did you discover a sneaky rule buried in the fine print? Drop your story in the comments below, because trust me, you're not alone, and your experience might help someone else avoid the same trap. And if you found this video eye-opening, make sure to hit that like button. It really helps the channel. Don't forget to subscribe and turn on notifications, because I'll be sharing more financial insights, tips, and strategies to help you protect your money and build real wealth. Remember, banks might not be working in your best interest, but you can. Knowledge is the first step, and you've already taken it by watching this video. The next step, using that knowledge to take control of your financial life. Thanks for watching, and I'll see you in the next one.